What's going on, guys? It's GBP baby. Welcome to another video. It's currently 24 minutes past midnight on Wednesday the 23rd of August, and yeah, we're gonna get straight into the charts. Finally had an expansive day today, so a lot of price action. You can see we're starting with DXY and we're looking at the weekly, and yeah, we'll go straight down to the daily and we'll see what happened. So you can see that price did in fact trade down lower, taking out sell stops below this swing low. I did mention that there was a possibility for this to happen, although I can admit I was unsure still. But now that we've had a nice bullish move up after taking out those sell stops, and we've also just about tapped into this swing high here. I'll just show you that now. We've just tapped that, so now that I see this, I'm now anticipating us to continue to move upwards and run into the volume imbalance that I mentioned was resting up here on the 4-hour chart in yesterday's video. So we'll drop down to the 4-hour chart, and you can see our price came down, took out those sell stops, and then after that aggressively ran higher, and now it's starting to reach for what I believe is going to be this liquidity void. Why is this a liquidity void? It's a liquidity void because there is no trading there, so there was actually no trading between, there's no data there between this low. You can see where the box is highlighted, but this is a liquidity void, and I'd expect price to want to refer to that, so I want to see if we can trade through that. If we trade through it and find support, I'd then expect us to start running into these highs, but I'm not sure how much action we can anticipate for this week. So in terms of my expectations for Wednesday's trading, I'll outline that now, but first I'm going to get my daily dividers up. So here we have the daily dividers. If we drop down to the hourly, you can see we had a very classic day, and when I say classic, I mean we traded lower during the London session, making the low of the day at 3 AM, and then after that we started to expand higher. And then, as you can see, as the New York session started, we expanded higher and started to run for this buy side liquidity here. And we just tapped into that at 10 a.m. And then for the afternoon session, we consolidated. Now we can anticipate consolidation in the afternoon session when we have a classic move like this, as in London making the low of the day, and then us expanding higher and running into the buy side. Especially with this much expansion, this is the most expansion I've seen for a very long time. So it's nice to see us finally start to show, direction in terms of where price is wanting to draw to. So that was nice to see today. But yeah, if I go back up to the 4-hour, we can actually identify a breaker. As you can see, we have a swing low here, a swing high here, and a swing low here. So that means that from this low to this high is a breaker, but we can actually be more specific with that breaker by looking at this order block here. Well, this candle here, this order block here. So what I'm going to do is I'm going to draw that out, and I'm also going to make that orange. I'm going to name that a breaker, and I'm going to mark out the 50% level of that because this is the breaker block. So the 50% level of that is 1.1031224. So I can mark that out now, drag that up to that level. I'll make that red and I'll make that dashed. And then we've marked out the mean threshold of that breaker block. So why have I marked out that breaker block? Well, I'm anticipating price to want to retrace back. Considering taking out these highs now, I can anticipate price to want to retrace back into the breaker. So that's what I'm going to expect to happen tomorrow, maybe to create the low of the day. I don't want to see price trade below this 50% level. I'm seeing this as a limit. So this is the lowest I want to see price trade for me to continue to have a bullish stance in terms of wanting to see more expansion on the upside. Let's drop down to the hourly and see how this looks. You'll see that we have a fair value gap resting here, laying perfectly at that 50% level, so there's reason for price to want to come down here. Also, we have this swing low that was created at 11 AM. So I'd see this as engineered liquidity, as in it was put there specifically so that price can come down, grab those stops, and then start to continue higher. So what I'm going to do is I'm going to mark out this low as sell side liquidity. And then I can anticipate price want to come down, grab those stops in retracement, and then continue on higher. Also, if we look at the range, as in from this high to this low, we can also get an idea of where we want to see price trade to. So I've casted up -1, and this level would be, this here would be the -1 level as to where I'd anticipate price want to trade to. So what I can do is I can mark that out as a target for potentially the high of the week, and you'll see that it is actually above that 4-hour volume imbalance, which is interesting. Let's see if we can see any other PD arrays resting up there, but first I'm going to mark out this as the -1 level. And usually when I make targets like this for the week, I like to make it dashed, and I'll delineate exactly what it is. So let's make that dashed, make it white, and I'm going to type -1 -1 anticipated range, as in I anticipate range, I anticipate that to be the highest price trades to. So I'm going to make that in the middle, put that in the center, and then we also have a 50% level. We can expect to run on stops there, but I'm not going to pay too much attention to that for now. Right now I've got my eye set on this anticipated range and this 4-hour fair value gap as a draw on liquidity. You'll also see that there's an order block here, a fair value gap here. I'm going to mark this out in red, because the reason I'm going to mark this out in red is because this should now act as support. So you can see that this is a bearish fair value gap turned bullish. You can see price bounced off it here, finding support. Again, there is potential for price to want to draw back into it one more time, but I want to see it continue to show support. So what I'm going to do is I'm just going to move this to the front. And yeah, that's pretty much everything. It's just nice to finally see some movement in the markets. It's been, as you can see, we've had so much choppiness and so much boring price action that it's finally nice to see a nice large expansion higher after taking out sell stops, and we can start to anticipate and expect a draw higher. Tomorrow in the news, we do have some high impact news. We have S&P Global Services PMI, new home sales. So we do have some high impact news drivers tomorrow that could help move price. However, yeah, that's pretty much. Let's see what else is this week. We've got on Thursday. Yeah, there's pretty much high impact news every single day this week. So let's go to Euro. I'm going to Euro straight away. Actually, we'll take a look at GBP, but GBP I don't think is the best right now in terms of price action, so to speak, but we can always look. So I have this fair value gap laid out. You can see we've dapped into it 1, 2, 3, 4 times, but volume hasn't closed inside, so there's potential for price for this week to want to actually trade into that. So that's what I'm going to anticipate. If we jump to the daily, again, not the best price action, but you can see that on Tuesday we traded above this swing high here, taking out buy stops. So buy side liquidity was tagged. That's nice to see. And then you can see we traded lower. If we drop down to the 4-hour, we can see a nice break in market structure right here. You can see we traded to that and continued lower. Why is this a break in market structure? Because this is a high, this is a swing low. You can see we traded lower, closed, and then the price touched gem and continuing lower now. There is a fair value gap left behind. Price may want to draw back into that, and I'll explain more about that on a lower time frame. So yeah, as I was saying, pound did actually trade perfectly to the target I marked out yesterday. If you go and watch yesterday's video, I stated how you'll see that I marked out the 50% level of this wick, this 4-hour wick. I said this might be a target for pound, and you can see we traded right to the pip of it. Let me see. So the high of the day was 1.28003, and you can see that the consequent encroachment of that wick was 1.28004, which is pretty much perfect, which was nice to see. So now that we have taken out this buy side liquidity and we traded lower, taken out this swing low, I want to see us return to the breaker. Where is the breaker? This candle is the breaker, but on the 1 hour it's going to look more clear. So what I'm going to do is I'm going to mark my daily dividers out again, and we'll take a better look. So I've put the daily dividers on. You'll see on the 4-hour we do have this candle. To me looks like a breaker because there's a high, a low, and a higher high here, and then we break lower. So this candle in general would be what I have my eyes set on. However, when we drop down to the lower time frame, you'll notice that it's not a breaker. like layout, so to speak. I guess, yeah, actually it is. Sorry, right. We've got a high, a low, and then a high, then we break. This is quite interesting, this order block here. So in fact, we could mark out this, but you'll see it lines pretty much perfectly with that 4-hour fair value gap. So because of that, what do I have my eyes on? Well, we have this beautiful fair value gap resting right here. So we can mark that out as a draw on liquidity for tomorrow's potential high of the day. I'm going to make this red. 1 hour fair value gap. And you'll notice that we have taken out sell stops here. So every time we take out sell stops, we expect to run on stops. So I run on buy stops. So we took out sell stops here. I'm expecting to run on buy stops. Where is the buy side liquidity resting? It's going to be above this swing high here. And what inefficiency is also resting above there? This inefficiency. Also, if we look at the trading range, and because this is delivered in 2 legs, we're going to look at this range from here to here. And you can see that this is in the premium. So there is reason to anticipate price. So long as this low doesn't get taken, I'd like to see price run up into this swing high for buy side liquidity. Just as a run on stops. So I'm going to put buy side, and then I'm going to just delineate this as sell side. And yeah, that's pretty much everything. And yeah, I'll just keep my eyes on this fair value gap up here. But you can see that pound is pretty, how do I say it? It's not as clean as dollar is right now, or euro, but we'll take a look at euro now. But it was nice to see us trade lower, tap it one more time, and then we've left the range, and now we're just simply in a consolidation. But what I'm waiting for now is a nice expansion higher, and then we can run for this buy side and take out and reach for this. There is actually another breaker here. Why? High, low, higher, high, and then we run lower. So technically, the this here is a breaker in itself. So this, what I'm saying is that this range from this low to this high has been, what do you call it? Has been rebalanced. This is a balanced price range, so to speak. So again, when price returns back up to this area, I can be confident to want to sell. Well, that's just something to keep in mind. You also see there's a fair value gap up here. I don't really want to see price reach all that way up. I want this to be left open, preferably, purely because it's in the upper half of the 4-hour fair value gap. So what I'm also going to do is I'm going to delineate I'm going to split this fair value gap into quarters. I haven't done analysis this in depth in a while, guys, so it's nice to be. It's nice, like I said, when the charts are giving me something to work with, it is much more fun for me, compared to like the last 2 videos. They were a bit boring purely because price just wasn't doing anything for me. Anyway, so this video is going to be pretty long. Anyway, so now we have this fair value gap marked out and split into quarters. The highest I'd like to see it trade, preferably, would be to the midpoint, which would be consequent encroachment. And I can allow for that, and you'll see that's also consequent encroachment of this wick here. And when we drop down to the 15-minute, you'll see that this order block, 50% of that as well. So there's reason for price to make that the high of the day, and then for us to continue to run lower into these sell stops resting below here, and potentially down to here. We could work it out. In fact, let's do that. We'll do the same thing we did with dollar in terms of using a range with the Fibonacci, high, low, higher, high. So what we can do is we can cast this high down to this low, and then we can look for the -1 level, and you see that's the bottom here. So there's potential for price to want to draw down there, but yeah, we'll see how price action treats tomorrow. Now let's go into euro. You'll see euro move much more smoothly than pound. We'll start with the daily and we'll do the same thing. So what did euro do? Euro traded higher. We took out buy stops here. We didn't quite trade into this swing high here, but same concept in that we took out buy side liquidity. We then traded aggressively, closing at the low of Friday, So this is a very bearish signal to me. We've also got a breaker, high, swing low, swing high, and now we've broken. But if we go down to the low time frames, we'll be able to see a more defined breaker. So let's drop down to the 4 hour. By the way, this big yellow box below here, this is delineating a weekly fair value gap that's been tapped in 1, 2, 3 times, 4 times now. But I'm expecting price want to draw into that. ICT is too, so make sure to go check out his reviews as well. But yeah, let's go to the 1 hour. No, let's go to the 4 hour, and I'll get my lines delineated. So as you can see, I've now got the daily dividers, and we're looking at the 4 hour. This is the swing high, swing low, higher high, and then we've broken aggressively lower, closing below this, well, just at this low, which is nice to see. So now what am I expecting? A retracement back into the breaker. Now the breaker technically is going to be this whole range here, right? And we can, if we mark out the 50% level of this range, it's quite interesting actually. You'll see that there's another breaker here, high, low, higher high. So with that in mind, we can then look at this breaker on a lower time frame, and we can see our price may want to trade back into that. So what I'm going to do, just to make things easier, is I'm going to drop down to the 1 hour time frame, and then you'll see the swing high here, the swing low here, the higher high here, and then we close below it here, and then we rush down into these lows too. But now I'm expecting a nice pullback into this breaker, specifically high, low, higher, high. So what I'm going to do is I'm going to draw out this range from this high to this low. This is a very big range, by the way, guys. But once we hone in and we mark out, remember the 50% level is the lowest I'd want to see price go. Sorry, the 50% level is the highest I want to see price go. I just realized what I said. So there, that's 50% level. We can make that red dashed, and then let's drop down to the 15 minute, and you'll see that that lines up perfectly. To be honest, probably need to fit the 15 minute. That lines up perfectly with the fair value gap and relative equal highs here and here. So what I'm gonna do is I'm gonna make this red. I'm gonna make this like a green, and we also have, if we drag this out, you'll see there's another fair value gap here. So this is actually a inversion fair value gap. Why? It's traded on the upside, now the downside, found resistance, and we traded lower. So when price returns back into that, I want to see it continue to act as resistance. Also, these relative equal highs, beautiful. We drop down to the 15 minute, we can have another look. You'll see that this high here hasn't actually been tapped, which is interesting. Why is this interesting? Because when we're moving down at such a rate, usually there's a run on stops, right? So when you take out lows, there should be a run on stops. We haven't had the run on stops here yet. Does that make sense? Let me show you what I mean on a lower time frame. So every time a swing low gets taken, there is a run on stops, right? And we took out all these relative equal lows here, and we haven't actually had a run on stops yet. So this is another reason I just want to see price draw into this area specifically. For example, here, once we took out this low, we've had a run on stops. Where's the run on stops? We have a swing high created here. We ran that. We also created a swing high, ran that here, and then broke lower. So there was a run on stops here. Here there wasn't one. Here there was one. You can see we have a swing high. There should be a low that's just been taken here. So these relative equal lows here, they got swipes lower, and then we run back above this swing high here. So it's been able to recognize little patterns like this. And honestly, guys, I've literally only noticed this like last night, the run on stops thing. But it's interesting to see how this run on stops didn't happen. And when I see that, I can now anticipate price will want to draw up into that. So yeah, it's quite interesting. So overall, what am I expecting? High of the day get made up here. Yeah, I want to see us start to retrace back into here. It's possible we might dip one more time lower into the fair value gap and then move back into this range, but I doubt it. Considering we've taken out these stops as well, I now expect us to retrace back inwards, but we'll have to see what price wants to show us. Overall, guys, that's been everything. Thanks for watching. This has been a much longer video, 20 minutes. I haven't made a 20-minute video in a long time. Thank you for watching. Don't forget to like, comment, subscribe, and I'll catch you in the next one. Peace.